All right, let's dive into Agora's latest earnings report for Q2 2025. Now, on the surface, management was all smiles, talking up big profits and some really cool AI tech. But the market? It reacted like it saw a ghost. So, we're going to dig in and figure out exactly what's going on here. Okay, so check this out. This is the heart of the mystery right here. On one side, you've got the company beating earnings expectations. Analysts were looking for a loss, and Agora delivered a profit. That's a solid win. But then you look at the other side, and the stock tanked, down almost 8%. That's a pretty violent reaction. It just doesn't add up on the surface, which is exactly why we're here. So what gives? What did the market see or hear that made them run for the hills while management was busy celebrating? That is the big question we need to answer. To do that, we're going to look at both sides of the coin, the bull case and, of course, the bear case. All right, first up, let's talk about the good stuff, the bull case. And honestly, looking at the numbers, you can see why management was feeling optimistic. There is a lot to like here, especially when you see their focus on profitability really starting to bear fruit. And here's the big one for the bulls, $1.5 million in GAAP net income. Now, the number itself is nice, but what's really important is that this more than tripled from last quarter. So it's not just that they're in the black, their profits are actually speeding up. That's a fantastic sign. But what about the top line, right? Revenue growth. Now, the headline number looked kind of flat, but you got to look under the hood here. Once you pull out the stuff they're intentionally getting rid of, the low margin products, their core business is actually growing at a really healthy 11% year over year. That's some real momentum. And this wasn't a one-off. This is their third quarter in a row of being GAAP profitable. You know the saying, right? Once is a fluke, twice is a coincidence, but 3 times, well, that starts to look like a real trend. It shows they know how to execute. So let's just recap the financial picture for the bulls. They smashed the EPS estimate, they've got that solid 11% organic growth we talked about, and look at that gross margin, almost 67%. That's really strong. So from a numbers-only perspective, this was a great quarter. But as we know, the numbers are only part of the story. Yeah, the profits are great, but the real excitement for the bulls, the thing that gets them fired up, is the company's huge pivot into AI. They're calling it the Conversational AI Engine. And folks, this is their big swing for the fences. So what exactly is this thing? Well, think about it like this. Agora has always been amazing at real-time communication, right? Like video and voice chat with no lag. They're taking that incredible network, that super fast plumbing, and using it to power the next wave of AI. The whole goal is to make talking to an AI feel just as natural and instant as talking to another human being. And they are not messing around. They just rolled out 3 massive upgrades. First, this attention locking feature. Think about being in a noisy coffee shop, and the AI can zero in only on your voice. That's a game changer. Then there's vision intelligence, so the AI can literally see and understand what you're pointing your camera at. And finally, natural avatars that move and react just like a real person. Each one of these is a huge leap forward. And here is where it gets really interesting for investors. The CEO came right out and said it. They expect to charge an order of magnitude more for this AI tech. Now, that's business speak for like 10 times higher. We're not just talking about a new product here. We're talking about something that could completely rewrite the company's financial future. Okay, so profitability is accelerating. They've got this killer AI story. So why on earth did the stock get crushed? It's time to flip the script and look at the bear case. Let's see what the market was so worried about. And first off, the proof is right here in the trading volume. It more than doubled its daily average. You see a spike like that, it tells you something important. This wasn't a little bit of profit taking. No, this was big money, high conviction, people heading for the exits, and fast. So a big piece of the puzzle is this internal division. Think of your customer base as a bucket of water. For their main Agora business, that bucket is almost full. They're keeping 97% of their revenue. That's pretty good. But the Shengwang business in China, that bucket's got a leak. They're only holding on to 87%. That 10% difference is a huge drag on the company's overall health. So let's pull all the bear arguments together. First, the CTO just up and resigned. The timing on that, right when you're making a huge AI pivot, is not great. It raises all sorts of questions. Then you've got that Shengwang segment we just talked about, consistently lagging. On top of that, they announced a new stock plan, which to investors just sounds like their shares are about to get diluted. And finally, that flat headline revenue number, it just overshadowed all the good news about organic growth. So you've got these 2 powerful forces colliding, right? On one side, you have this incredible story of profits and a futuristic AI pivot. On the other, you have some really serious concerns about leadership, the health of the business, and dilution. So where do we land on this? Let's get to our verdict. Okay, after looking at all the evidence, both the good and the bad, here's our official rating on Agora. We're calling it market perform, and here's why. That AI engine is the real deal. It has the potential to be an absolute home run. But, and this is a big but, the risks are just too high right now. The CTO leaving, the drag from the China business, the potential dilution, it's a classic case of high risk, high reward. And for now, those two things are perfectly balanced, which is why we're staying on the sidelines. So what could change our minds? Here's exactly what we'll be looking for in the next earnings call. We need to see them start making real money from this AI engine. We need to see that Shengwang business stop leaking customers. A big name partnership would be huge for building confidence. And finally, if they keep buying back their own stock, that tells us management truly believes in the story. And really, it all boils down to this one simple question. Is the future, this incredible AI opportunity, going to arrive fast enough to overcome the problems of the present? It's a race between their innovation and their legacy issues. And that's the story you need to be watching. All right, that's our breakdown. As always, remember, this is for informational purposes only. This is not financial advice.